We're now on this. Let's bring in Michael Cugino. He is president of the Permanent Portfolio Family of Funds, and AJ Oden, head of investment risk for BNY Mellon Investor Solutions. Both thanks to you guys. Michael, start with you. Are you one of these investors who've been dumping the stay-at-home, work-from-home stocks and buying into get out and travel or value names?
Good to see you, Brian. No, we've had exposure to a little bit of both. And so, no, we haven't been making any major portfolio changes. I do agree with the trade, though, in the long term, the post-COVID, the recovery, the reflation. And going forward, that's where the probably longer term opportunity is. But you definitely don't want to give up on the higher growth, high tech names because there's revenue growth, there's cash flow growth, earnings growth there. And those stocks have a place in a growing economy as well. So it's not an either or question to me.
AJ, we often forget there will be a world post-pandemic, hopefully sooner than later. And what I know about that world is this: demographics are often destiny. There are 85 million millennials, the first of which is hitting 40 years old. They're looking to move out of their apartment into a home. They're probably doing it faster now because of the pandemic. Interest rates are low. I bring that up because ultimately, could real estate be one of the best trades of the next 5 to 10 years?
Well, it could. I guess if we think about, the interest rate environment that we're in, as our position at BNY Mellon Investor Solutions, we are overweight risk as we see, the yield curve steepening. And so real assets do have the potential to do well in a rising inflation environment. I would caution, though, allocating to, I guess, maybe even like an MBS side, because we have to take in consideration, though, that we've had a lot of sort of help from fiscal policy and even from some of the forbearances on mortgages, that those numbers might not be completely accurate. So as much as real estate, does look attractive in real assets in general, I would caution, I guess, moving completely there. And it's really just all about sizing your bets accurately. And so some of the pullback that we are seeing in growth, I guess necessarily what I would consider doing is just reallocating and positioning better. So sometimes it's not just necessarily real assets, but even looking at value as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.